Hi everyone, this is Terence Tan, the Impossible Investor. Now market is roiled up over here. Market fell by about 3% almost worldwide. The US market last night opened down on a big gap over here and it never ever got up. So what am I going to talk about in today's video for all of you? It's really to hold your shots. Okay, now what do I mean by hold your shots over here? Because we see a lot of systematic selling in the markets last night. So it's not so much of what you call the capitulation move, or what we call the final sell-off move, where everyone panics and gets out of the market. No, it's not so much that, but it's a very systematic sell-off over here, where we have a big gap down over here, but what we have is a slight rebound before selling comes into the market again. So in a simple way, we would say it's a more organized format of selling. Yes, it's a big drop that we're seeing in the S&P 500 over here. 100-point drop on close over here is no mean feat. But if you've been paying attention to how the market has behaved over the last 2 and 3 years over here, it is actually becoming somewhat of a norm over here. Now, so what led the rally? What led the fall off over here yesterday was really pretty much the technology stocks that have been the one that's been pushing the market up over here. So they are the ones leading the markets and causing most of the major damages and the problems over here. But because of the fear in the market, it has led into what we call a sell-all effect. So yesterday was pretty much a sell everything that you have kind of day, where no one's buying, no one's stepping in to really put up big orders to make any purchases, but just persistent selling. Yeah, all right. Now, so what am I going to cover about in today's video over here is really pretty much what you need to look out for, where your opportunities are over here if you're looking for some, and really what must you pay attention to in the coming days that we're going to see in the markets as we play out through the rest of the weeks. All right, now, so I'm going to take you to the charts and some of the platforms over here. So let's look at some of the opportunities that we see right now. All right.
All right, hi everyone. Now, so let's get to the market and what the U.S. market or S&P has been doing last night. So let me just pull the picture a little bit wider. So what we see over here is market close on Friday at about 3336 levels on the futures. All right, but it immediately gap downwards on the Asian hours to about 3300. All right, and only to see that when the US market started opening, all right, it kind of opened near the lows over here. We had a bump up, perhaps because of some covering of the short sellers, all right, before the selling resumes, all right, and we have what we call a range day after that. All right, now, so what I want to cover over here is, while many of you are thinking right now that the market has cracked, all right, and you are eager to get short, but it is never the best over here to start chasing the market when the market has already got off the gates. So what you really want to do right now is, like I said, for today's video, the topic is really hold your shorts. All right, it's really pretty much to look for opportunities to, short stocks, or to take advantage by using option selling strategies with lower risk profiles over here to capitalize on the downside on stocks right now. But having said that, it doesn't mean that there are no opportunities on the other side of the picture as well, because as option sellers, one great thing we have is the luxury to be wrong. All right, even if we have jumped into the markets too early over here, right? But on the hindsight of a big sell-off day, it's never good to fully load the truck. So which just means, like a day like yesterday, when you see selling is persistent, all right, you could nibble a little bit on a 1-2 stock position, but never to load your entire portfolio on such a big sell-off day, because you may have another 2-3 days of rippling effect before it's finally over. All right, now, so many of you are perhaps rejoicing right now because the Asian market sees a bounce right now of about 20 over points on the futures, but be aware, on a huge sell-off day like that, it may just be the short sellers covering some of their shorts over here on profit taking. All right, and before rejoining again when the next sell-off resumes in the markets. All right, so you do have to wait out, be patient right now, and see where the markets take you. right? But along with yesterday's movement, one major thing that we're seeing right now is really this. There is finally some movement and some real scare going into the volatility index in the market. Yes, we had some couple of sell-off on the onset of Corona, but it only brought the VIX to about 20. It was huge selling, but there was no fear in the market. But we see a slight shift, change in the market yesterday night. Now, so where are the opportunities if you want to get long over here, and where should you aim for if you want to get short? Let me discuss some examples before I finish up today's video. All right, now, so as part of my graduates over here, what we have is we have built a screener. All right, so really my graduates would probably just access the screener right now and see what stocks are currently pretty much undervalued in terms of their stock price that they're trading at right now. All right, now, so you just go down the list over here and pretty much quickly aim for companies that immediately stands out to you. And right now on my list right now, I'll probably see Oracle right now that probably stands out. We all know Oracle is a really strong technology company on services and recurring income. All right, so I'm just going to pretty much quickly pull the chart out, which is a one click through from the screener itself. All right, it brings me to the charts. All right, so while we are not big on market analysis or technical analysis over here, but we just want to make sure that if we do enter right now, it's pretty much on the back of some good support levels before we get ourselves exposed into the market. So what we can see is the gap over here on yesterday, which is a majorly a tech sell-off over here. All right, we see the stock pulling back towards its support level right now at about 52.50. All right, so over tonight or maybe tomorrow, if we start to see the market stabilizes and selling, subsides over here, we may actually start thinking about getting into some positions in this option sell positions in Oracle over here. All right, so being on the screener over here would mean that Oracle fulfills all the fundamental requirements that impossible investors require. All right, that I'll teach of them over here, and it makes the stock selection process really, really simple. All right, as you can see on our filter matrix over here, Oracle is trading at what we call a safe to moderate price. So safety level is in check. All right, the support levels on the charts, technical wise, is also in check. So it provides a great environment to pick an option sell trade for the put options over here for my students and my graduate space. All right, so if you're option sellers, this is something perhaps you can look into as well. Right now, going down the list quickly, another company I would see right now staring in front of me is really Cisco as well. All right, so assuming it's a tech sell-off over here, Cisco will probably suffer from the downside in the markets yesterday as well. So let's look at what opportunities we've got from Cisco. All right, so Cisco has fell to about $44 level. All right, and we can quickly see that there is a strong support level at about 43.40 of 43.40. All right, so we are nearing that point as well. So we may be looking for opportunities in Cisco, but there is a slight concern over here where the 20-day moving average seems to be cutting off the 50-day moving average. So we may just be a little bit more patient when it comes to Cisco over here. But we may capitalize on some quick option sales with short expiries to take advantage of what we always deem and call as a rubber band effect that benefits option sellers with the error of margin that we get from selling options. Right, but do make sure you know what you're doing and know how to take advantage of it before you go about just selling options right up now in the markets where volatility is high. All right, moving on quickly over here. Going down the list, let's see what else do we have. All right, oh, that's pretty interesting. We probably have Wells Fargo over here. All right, actually, I'm going to discuss quickly later on while I'm looking to go short in the financial stocks and financial sector over here. But Wells Fargo is pretty much a company that I'm actually looking to go long in the longer term. All right, why? Because in my last couple of posts on my Facebook page over here, together with this video right now, Wells Fargo has suffered from some issues and operations that the CEO has done on the bank. All right, so they suffered some lawsuits over here and they need to clean it up. They finally put a number on the damages that may occur. And right now we could see the bank stocks price stabilize a little before rebounding back up. All right, and what we see right now, it's fallen yesterday as well to about $46 level. All right, but this is a level where you can see some supports over here All right. Of course, the next one down will be down about 42.50 levels. All right. So anywhere in between these levels over here will provide a good opportunity to sell some options, more specifically put options over here on Wells Fargo. So again, while once I start seeing the market stabilizes, I may initiate some option sales on these three stocks that I've quickly picked out over here. Of course, there are much more. You may like other stocks that you have probably seen on the list so quickly so far, but these are just three quick ones that I want to show you and pick out from a screener that our students have access to, which makes trade selections really, really easy for them. All right, let's quickly move over to the short side of things. All right, so one thing that we see in the markets yesterday was pretty much this. There was a coordinated effort in selling. All right, now what do I mean by coordinated effort in selling? So what we're seeing right now is on the brokerage platform, we have index watch. So I'm just pulling out the S&P 100 index. So pretty much all 100 stocks were down yesterday, with the exception of Duke Energy, which is barely flat, and Gillette Science, which is a biotech company. There might probably be some rumors on this that led it upwards by 5%. All right, but we have big losers in Booking Holdings, which is up to 7%, AIG, which is almost 6%, all right, BlackRock, 5%, all right, and Citigroup, another 5% over here. All right, also coupled together with Cisco Systems that we talked about just now and CVS Health. All right, now, so it was what we call an organized sell-off day where, everything on the list is being sold off. And that's what you want to see in a real downturn in the markets over here. All right, so there's a coordinated sell-off, so we may actually start to see more coming into the market. But the interesting thing was that actually the banking stocks were not as severely damaged as the big tech stocks that have driven the market up. All right, so the ones that have driven the market up the fastest are also the one that is dragging it down the fastest right now. So financials are not bearing the heat right now. But one thing you really need to understand is in my last couple of videos, I mentioned about the issues they are raising in the bond market with the interest rates, right? And it seems that in the near horizon, the Federal Reserve have, pretty much no choice, all right? Their hands are pretty much tied where they may have to start thinking about lowering interest rates further so as to curb the inversion of yield curve that is happening very, very quickly right now that is spooking the bond markets and then trickling into the stock market right now as we see. So banks are not going to fare well in a very low interest rate environments because their profitability is going to be affected. Right, so I'm actually looking at some banking sector stocks right now to capitalize on going short on this couple of stocks. All right, so what we have right now is JP Morgan. All right, JP Morgan has, as of yesterday's move, cracked below the 20-day, 50-day moving average yet again. All right, so what we may want to see over here is a quick bounce back. All right, a quick bounce back closer towards the 50-day moving average, and that may be a place where I'll start to look towards taking on some short sell positions on not so much the stock but on option strategies so that I'll be able to capitalize on it while being able to control my risk as well. Right, in a high volatility market like right now, you really want to go into trades with controlled risk so that you basically know what your damages are before you even think about the profit margins that you can get out of any trade that you're looking into the market. Let's look at some other stocks over here. JP Morgan is one. Let's look at Citigroup right now and see what we have. All right, Citigroup has fallen even harder over here, so we might need to see a much stronger rebound before I'll touch it. All right, another one we'll look at quickly over here is probably Morgan Stanley. All right, Morgan Stanley has a quick dip now. All right, it's fallen below its last and broken through its last support level. So right now, a bounce back towards maybe 52 would be a good place to identify some short levels. So yes, quickly looking into the financial sectors, I'll be looking to take up some short selling positions through options over here on perhaps Morgan Stanley and JP Morgan as well. All right, if you don't want to go so much into individual stocks, you can look at the financials ETF, which is really the XLF. All right, the XLF had a really big sell-off day over here where it pretty much gapped and closed at 29.77. All right, so if we see a rebound back towards maybe 30.5 levels or closer towards it, all right, we may actually look for an opportunity to establish the same short selling positions as well. All right, now, so this is what I just want to really quickly cover and bring to your attention in this Hold Your Shorts video for today's session. Do remember to click on the subscribe button on this YouTube video just below it if you want to find out and keep up to date on more videos that I'll be putting up regarding the markets, especially right now when volatility is starting to move into the market and there are uncertainty everywhere. All right, and also, in my posts, I'll be putting up my Facebook pages as well as my Instagram official account. So do make sure you follow these media so that you'll be able to capture all the news and informations that I put out about the markets on a regular basis. All right, now, till the next video, happy trading. Make sure you trade safe over here. This is Terence Tan, the Impossible Investor, signing off for today's video. All right, catch you soon.